Good evening, Ira Epstein, and here we are with your metal market wrap-up for Wednesday, and we're at the 5th of October, 2022, getting on to 6:20 p.m. Central Time. Well, it's an interesting day. I think today was the day that we said in the stock indices, and let's pause. Why? Because you have 2 days of now jobs reports coming in front of you. You got the unemployment claim and then the jobs report itself. The market wants to digest this. It's trying to figure out, and it's just spending a ridiculous amount of time on it, when is the Fed going to pivot? Waste of time. The Fed isn't going to stop raising interest rates until sometime in 2023 at the earliest. Okay, it could be early in 2023. It could not happen then. Depends how sticky inflation wants to get. Every member that comes out is hawkish. I created an area in my full research report, which comes out twice a day. And I devoted an area called Fed Talk. And then I give the highlights of what each Fed member is saying, because you got somebody on the road all the time talking. It's pretty universal. They are on the same page to fight inflation and drive it down. Whether they can get it to 3%, 2%, doesn't matter. The name of the game is getting it down. Then the question is how? None of them are answering, I think we'll stop raising interest rates this aggressive with the November hike. They're not going to answer that. They're going to say they'll do what they have to do until they beat the beast back. Then they'll meet and figure out, is it 50, is it 75, is it 100 points, all right? What if these reports come out super strong? I mean, come on. What if the employment claims drop again? It was a surprise last week. What if the jobs data, they're looking on Friday started off at 250,000 jobs on Bloomberg. Now the estimate is 265. I don't know. To me, that's growing. That's not shrinking. So where's the weakness? That's what the market wants to see. Where is the weakness? From those reports, you get a couple of days of trading in front of the CPI that comes out next week. With that, whatever else reports come out, they're the gravy. These are the big boys that will set, in my opinion at least, what the Fed is going to do. Now, what can change everything from stopping the Fed from a November hike, and it would stop it in its tracks, is if Russia were to launch a tactical nuclear weapon in Ukraine. I think the Fed would sit back, the world would get shook, and it's not time to be raising rates, it's time to adjust. I am not saying that is going to happen. But barring that is my point. What else is there to stop the Fed from raising interest rates? Now, you are seeing a few of the banks balk. It began today. Some are surprising. Instead of half-point hikes, quarter-point hikes. Okay. Everybody's got a different economy, but we're the big boy. We're it. And what we do, everybody looks at. And if they want to pause, fine. If we raise rates more and the dollar goes up, they have another issue on their hands. If we don't raise rates and the dollar falls, it offers them another problem. So we got to deal with what this is. Got it? That's how I'm viewing it. When you look at the gold market, it's come alive for a bounce. I don't know if it's anything more than that. You're up for the week, nearly 3% off the lows. That's good since last Friday. You've gone sideways here. The pattern is one where on the swing line study, you have higher lows, higher highs. The most basic part of a chart is figuring out, are you in an uptrend or downtrend? When people just want to look without these swing lines and they don't understand them, I always get confused. How do they know what that is? How do they know if, in the classic term, you're making lower highs, lower lows, higher highs, higher lows? With the brown lines, it's easy to see. Everything else is a guess. So that's what I teach, and it's on every chart I look at. Next, I look to see where you're in relation to a key moving average, what I call the line in the sand, which is the 18-day moving average of closes. When you're above it, you have a bullish bias. When you're under it, you have a bearish bias. If you're above it and you break, you look for support at that number. If you're below it and you rally, you look for resistance at that number. Is it going to be perfect every time? Of course not. But is it going to work on a general basis? I love it. You determine if you like it. Next, I look to see where are the Bollinger Bands. Now, there's different parts. You are used to me talking a Bollinger Band. Just as important are window envelopes to me. Maybe I shouldn't say just as important. They're important because on the way up, there's going to be a window envelope that's a resistance point that you won't see unless you know how to work with them. And if you see them, they offer resistance and support points, depending if you're falling or going up, and potential, if you use them the way that I do, areas that you might want to consider taking some money off the table, short side or long side. Your call. Well, as the market's coming up, you've got your resistance there. What are the odds of closing over the Bollinger Band? 5% of the time or under it. So the market looks at it, not just Ira. I'm not the magic guy. John Bollinger created this. Give him the credit. This was a brilliant thing he did. I've made it a better tool. I've added things that he doesn't have. I've got my stochastics. Mine don't look like yours. I realize it. To get my formula, you got to be a subscriber with me, okay? Mine I like better than the standard formula. I practiced this with the man that developed slow stochastics, worked with him on it, and I think I got a better mousetrap. And when I put this with that, the game changes. And as I see it, you have an overbought market approaching a resistance point in an uptrend. Can I make it easier? The gold-silver ratio, waffling, but staying underneath the 18-day average of closes. A week and a half ago, you came up, tested it, came back down. So overall, even though you get bounces, silver is generally speaking stronger than gold. And when you look at the silver, it got up the other day. Let's take a look. You'll see what I'm getting at. This is always great to learn from. Here's the market on its run to the upside. I generally expect the resistance to come in at a key moving average and a Bollinger Band. So here's the 100-day. Market is up here, not in overbought territory, or is it? It is. Any reading over 70 to me is overbought. You're also over the upper Bollinger Band. I only think you'll stay over it 5% of the time. The market, let me get back to that. The market on the next day, again over it. Now, this is where the suckers are buying the market. Because now you've got the next day, since you got 2 days over the band, a 3% chance, the way that I teach in my course, of the market staying over that number. I want to be the house. 97% odds over and over is my house. I want to be the other side of that bet. So the market gives you a correction. Now, on the correction, you have the 100-day average. So when you're over that number, what was resistance, and it certainly didn't act like it was a lot of resistance, it went through it like that, could be support on the way back down. I don't think you'd argue with that, and this is what you're doing right now. So you seem to be caught, in plain English, in an overbought market between the 100-day and the upper Bollinger Band. If it were to get a big shove to the upside, the 200-day average comes into play, and if it lets go here, the support comes in back at the red line, the 18. Are you in a clean-cut trend? No. You've got momentum up, but you're not trending. In the copper, to me, this was one of the easier calls I made. Back here, I kept telling you, you're going to get two things. Number one, this week you have the Chinese holiday. So businesses in China across the mainland, they're closed. You don't have the wharfs working. You don't have a lot of things working. You got skeleton staffs. Okay. Second thing, you're all of 11 days away now from the Party Congress. So what are the problems in China? Well, COVID and the handling of it have been a big problem for the whole economy. The draconian method of shutting down cities of 20 million people at a time certainly didn't do anything to help their economy. Second, they have a property nightmare on their hands. They have people that refuse to pay mortgages. Remember, mortgages are different there. You go and you buy a property. When you buy it, it's not built in many cases, not all, but many, and you pay on it from the day you buy it and all the way through. So if the developer doesn't have the money to finish it, that doesn't matter. You got to keep paying your mortgage. So there's a rebellion going on, and people are falling behind. And even with China saying they're working on it, every report I'm reading says, no, that isn't going on very well. They got to do something. And if they do it, copper comes into play. That's how I look at it. In the platinum and palladium markets, well, they're up because of South Africa. South Africa's energy is such that the government has cut back energy to the miners. And smelting operations. They use tremendous amounts of energy. They got to keep their population from going into blackouts, and the cost structure is terrible. So as that's all going on, you're producing less. Well, that's generally bullish, not bearish. You're making highs in recent moves here. Why? It's not demand, it's lack of supply. Big difference. In the dollar, you're caught. You had your move over the upper band. You've fallen back to a neutral territory. And why would anybody make a big bet in front of these two reports coming out? After you get the unemployment, a series of bets will come in. They'll probably come off by the close because a lot of traders aren't going to want to go through the jobs report. After the jobs report, it's clear sailing to the CPI a week from Thursday. That's how I'm viewing the markets. So if you like what I do there, you're going to love the courses when I teach you how to work with these Bollinger Bands and what to do. You're going to see that in a minute. You'll notice I didn't mention tomorrow's webinar. We're already 100% booked out. Told you that was going to happen. So getting big followings, and I'm not increasing my license. What we have is where it's going to stay. It'll be first in, the first out. If you're there, remember to sign in at about 12:15. A lot of you have done, and I thank you, sending me questions on spiders and stocks. I've made the charts. Pretty soon I won't be able to make any more charts. We are that full of the charts that we've got. I probably got 25 of them already that people have asked me to do, if not more. So there'll be more. There's always more tomorrow. Futures, you don't have to send me the notes on. I have all the futures charts. But how do I do 3,000 stock charts? It's impossible. All right. Kramer's got groups. I'm not a Kramer. All right. So remember, learn Bollinger Bands. Take a look at this. Change your trading. At least get an education. Maybe it won't change it. Maybe it'll give you another edge in it, and maybe you'll just hate it. I don't know. I love it. You take a look at it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.